Alright, hello everyone, it's Wednesday, October 2nd. This is Liam McMahon. Welcome to the midweek webinar. It is 4:53 p.m. here on the East Coast, so we're just about 53 minutes after the U.S. equity markets have closed. We're going to take a look at a bunch of pairs today. We've had some fairly frustrating price action over the past 48 hours in terms of choppiness and false breaks, which is probably, I guess, in retrospect, not overly surprising, considering the debt ceiling, not debt ceiling, we're not there yet, budget crisis in the United States, and the bunch of data that we've had out of the Eurozone and out of Australia. We had some U.S. data released today. We had ADP employment released. Usually a preview for non-farm payrolls, but we may not see non-farm payrolls at all this week, so it might be all we have to go on. Slightly disappointing, 166 against 177 expected, something like that. So slightly less than expected, but nothing overwhelming either way. All right, please take a moment to look over the risk disclaimer, which should now be on your screen. Then we'll get started. Alright, we're going to start with Kiwi dollar and go through a bunch of Kiwi pairs. We need to talk about first what it was exactly that has got the Kiwi all excited here the last couple hours. You can see really since late last night we've rallied very strongly off 82 or 83.23 now. So more than 100 pips off the lows very quickly. This is a 4-hour chart that's up right now. The reason that the Kiwi has accelerated so much lately are comments by RBNZ president, I think he's president, Graham Wheeler, who said that they may be looking to hike rates sooner than expected or at a greater pace than forecasted if the housing market doesn't slow down. This is not particularly news, all right? I know there have been comments that this isn't fully priced in. I agree with that, but this isn't new, completely new, all right? I've been talking about this for a while. The RBNZ has hinted at this for a while. They are very concerned about the housing bubble that is currently starting to form in New Zealand. All right, a couple of the urban areas, housing prices have been accelerating far faster than anyone wants to see them, and there are some pretty serious concerns about a bubble. That's why the RBNZ has pretty much sworn off further rate cuts and has been talking about rate hikes. All right, we've known that they've been one of the more hawkish central banks for a while now. They're neutral in terms of their current statements, but they have been suggesting that rate hikes are going to start early next year. That still seems to be the case, but if housing prices don't start to slow down, we may see those hikes come faster than initially expected. So that's what's got the Kiwi all excited. We're rallying up here on Kiwi dollar to 83.35 or so, which is this horizontal support resistance level. You can see it from here, all right, and here. Major range now established on Kiwi dollar. I would look to trade this as a breakout if we do manage to basically hit 83.50 and close up there. You can see trend line here. All right, we false broke above it and then broke back below it. You can draw a trend line here if you want, but it's kind of just imaginary. I'm really looking just to play this horizontal range here between basically 83.50 and 82. We held the bottom, now we're up testing the top again. Euro Kiwi, all right. Get rid of this fib. This trend line on Euro Kiwi really still pretty much intact. We did kind of futz above it a little bit. 200 period EMA here on the 4-hour chart. That's this tan line. You can see held pretty well. If I zoom in, all right, you can see we didn't manage a 4-hour close above that 200 period EMA. We tested it once, twice, 3 times, 4 times. Couldn't put a 4-hour close above it. And now we have a pretty significant reversal candle forming on Euro Kiwi. So I do kind of expect to see new lows here on Euro Kiwi. sometime later this week. If we can get below this little trend line here, all right, basically 163, 4-hour close below 163 should open up a move towards 161 and possibly lower. So Euro Kiwi does look primed for lower prices. It has been very choppy lately, so you got to be a little bit aware of that. But Euro Kiwi does look good for lower. Kiwi CAD spike higher. Least favorite Kiwi pair right now. It's choppy and a little bit overextended. So I'm going to pretty much pass on anything having to do with Kiwi CAD. This level here, 86.38, that's the next major resistance level, so watch that. But other than that, I have really no great interest. Kiwi Yen, alright, we had this head and shoulders pattern that we broke down from. We've now sort of pushed back into it. Guess you'd kind of draw it like this. Alright, either way, we broke back above the neckline. That would be the breakout level to sort of keep your eye on. It's a little bit actually of a channel right now. This 50-period EMA here on the 4-hour chart, that's 81.30. All right, roughly corresponds with the top of this trend line. So if we do manage to see a break above that level, we could see an acceleration higher on Kiwi Yen. But I'd mostly look for a trade to break out of this channel. I don't think that we ended up at a major fib level here, but let's make sure. Yeah, alright, so we didn't quite make it down to the 50, and we did break below the 38, so not a lot of fib help here. So watch that 50-period EMA, and then this channel here on the 4-hour chart. Possible breakout coming, alright. We managed to see something like this. Could present a nice long opportunity. Pound Kiwi, terrible, terrible pair. Again, aggressive reversal here right into 4-hour moving average support. Again, I think Kiwi pairs are going to continue to favor the Kiwi, so I do expect to see Pound Kiwi lower. Again, major level is 1.9, 1.88. That 200 pip range is huge support. Once we start getting down there, I'll start thinking about maybe trying to buy Pound Kiwi, but up until that point, I'm pretty much going to stay flat with a pair. Yeah, all Kiwi, that's actually a good point. We're just had the daily close, alright, so it's a good time to take a look at what exactly this late day news did for all of Kiwi daily candles. Alright, daily candle Kiwi Yen, 50-day EMA straight rejection, huge bullish candle. Kiwi dollar, huge bullish candle. Again, off previous support level. Euro Kiwi. Huge bearish candle off of 50-day EMA. Alright, so we had a lot of technical levels coincide nicely with that Wheeler statement. Strong rejections, very strong bearish candles. Does give support going forward for further Kiwi gains. Aussie, we'll jump to the cousin. 4-hour chart of Aussie. Alright, since this breakout, I've been bullish. It's been chopping around a little bit. We came down. We didn't quite manage to retest it. We came, you can see the attempt there. We started to march higher. We marched higher, incidentally, off what is basically the 618% fib. Alright, right there. That is the 618. We dipped a little bit below it, but for the most part, held it. I do expect new highs in Aussie dollar above 94.42. Maybe up to test 95 again. We'll kind of see from there how it goes. This Kiwi acceleration has helped out the Aussie, though not a ton. Aussie Yen, alright. I'm basically watching this descending trend line here on Aussie Yen for a breakout higher, similar to what Aussie Kiwi looks like. Aussie CAD continues to trade in this channel. Major resistance up here, 98.15 or so. Major support down here around 95.76. I don't have a ton of great setups on Aussie CAD while we're within this channel. This was a great setup down here earlier today at about 96.55. Nice retest, 200 period EMA on the hourly chart, but I missed it. But it would be a good place to get in. Up until we see something similar like that again, I don't have a ton of great entries for Aussie CAD, but I am keeping an eye on it. Euro Aussie. Alright, continuing to chop around. Still, again, looks like it could head lower to me, but it's a little, it's been choppy for a while. Pound Aussie. Okay, Pound Aussie starting to consolidate here on the 4-hour daily chart, up near its 174.80 previous highs. I do like pound Aussie for shorts. Down towards about 168.88, 169 area. But you'd need a big stop right now, so I'm not doing anything with it, but I am sort of keeping an eye on it. The reason I like pound Aussie for shorts is I showed you why I like Aussie longs, and I like pound shorts. Pound dollar, I like short from a longer term perspective here, as we are nearing some significant resistance here at the 162 to 163.50 area. All right. Plus, we've had 1, 2, 3, 4, 5 straight green candles, all right, on pound dollar. This has been a very aggressive move. So aggressive that as we hit this major resistance area, I am expecting to see a pullback. I would think we could see a pullback, not an overly deep one, but we do have this 200-week EMA to look for. We could dip back to retest this. That's about 159.50. Yeah, 159.50. Or we could even fall back a little bit further down here towards about 156.88. That's the 100-week EMA. So I am keeping an eye out on pound dollar. I do like that longer term for shorts. But if we do see a pullback down into this area, I'll be looking to get very heavily long pound dollar for quite a ride back up, maybe even to the 170s. I'm pretty bullish this pair long term, but short and medium term, I'm pretty bearish pound dollar. Euro dollar, we have the ECB today. Market liked what it heard. Draghi was pretty dovish and downbeat on the European economy, but he didn't say that they were going to do an LTRO or an additional rate cut anytime soon. He did acknowledge that a rate cut was discussed, but apparently discussing a rate cut is no longer enough to get the euro to sell off. So you can see we have again broken out. Again, another choppy pair, all right. But we again broke out. We put a 4-hour close above these previous highs back here. I do like euro dollar to the upside. All right, I've liked euro dollar to the upside for a while now. This is why. From these 127.50 lows, all right, up here to 134.50. We had a perfect 50% fib pullback, perfect test of the 200-day EMA. We've rocketed higher from there. We made the new highs as is required, or not required, but as suggested by the 50% fib holding. But we haven't completed the measured move yet. All right, the measured move is the sort of AB equals CD type thing. All right, for those of you that are familiar with that, it's the 100% extension. That's above 138. All right, I think that is the logical target. I will be watching 137 at these previous highs for resistance. Big profit taking area there. But I do think we could see euro dollar tip up towards 138 before rolling over. So I'm going to be keeping very careful eye on euro dollar going forward. Dollar yen is the only yen pair that I'm actually bearish on right now. Same thing, if we manage to clear this trend line, I'll flip. But I do think, I talked about it in the chart of the day today, I do think that bears are going to try to push dollar yen down towards about 96, the 200-day EMA, this previous low. I think that will be where we'll start to see profit taking and then a reversal higher. We'll see. A lot of that will depend on how exactly this government shutdown nonsense plays out. The longer it lasts, the weaker dollar yen is likely to become. I have a hard time believing that the dollar is going to be able to stage any significant rally while this is going on. But we'll see. Maybe that won't be the case. Risk off may change that. Yeah, alright, so that's a good question. So actually, this is something I should know. Do you pronounce it Caroline or Carolyn? You're Caroline, right? Caroline. Caroline. All right. Excellent. All right. So that's a great question. The reason. All right. So here is E-mini futures daily. We might as well talk about this here because it's a risk type of thing. Oops. I do not want any orders now. All right. E-mini futures. Let's talk about this real quick. Then we'll go over the U.S. All right. Trendline break. We've moved sideways. We have not been able to clear this 50-day EMA. I've harped on that level. I harped on it when we gapped down into it. I said that we were going to fill the gap, and we did. I'm actually pretty proud of that. Unfortunately, I didn't trade it, but I did say it was going to happen. We filled the gap, and now we'll see. But this 50-day EMA holding up very well. The longer we sit on it, the more likely we are to see the markets finally start to rally. A breakdown is going to tag this 100-day EMA at 1650 and this very significant longer-term trend line. You can see it dating all the way back to November of last year. That will be a significant level. As long as that level holds, bulls are in control. Once that fails, then we might actually start to see a significant correction. But first, we have to deal with this 50-day EMA, and so far we have not been able to. However, despite this fairly significant risk-off period, the dollar has suffered. All right, this is the dollar index. So that is an unusual correlation, as most of you probably know. The dollar and the yen tend to benefit most in risk-off trade. They are funding currencies. They are risk-averse currencies. They do well when people are scared. But people are scared and they're still selling the dollar. Why is that the case? The dollar doesn't give a crap about the budget shutdown. Equities do, because the budget shutdown has a real impact on U.S. GDP. All right, government spending, huge chunk of the GDP. We have 800,000 people without jobs. That has a real economic impact. We're losing tax dollars, etc. So the U.S. economy is actively suffering every day that the government remains shut down. Now, that affects equity markets, obviously, because people are afraid that lower growth prospects, companies are losing money. With companies with huge government contracts, think the defense sector, like Lockheed, think Boeing, even like smaller like companies that make parts for Boeing and Lockheed are in a lot of trouble here. Companies with NASA contracts suffering. All right, so the government buys a ton of crap and they're not doing it right now. So that's why equities are weaker. The dollar is weaker, though, because of what the budget impact suggests for the future. All right, so right now the U.S. government is debating passing a budget to fund the government for the next year. The sticking point is President Obama's health care bill, Obamacare, or the Affordable Care Act. Republicans want to defund it for a year, as that's their price for passing a budget. Democrats have no interest in doing that, so that's the sticking point. We can't get the Republican-controlled House won't pass anything that the democratically controlled Senate will agree to, so we're stuck at an impasse. The dollar really doesn't care about that. What the dollar cares about is what this political gridlock suggests going forward. In November, we are going to have another debt ceiling debate. If you remember it from last year, whether or not to raise the debt ceiling was a huge deal. It's going to be a huge deal again. If the U.S. doesn't raise the debt ceiling, we're going to default on our debts, which will be a huge dollar negative. It's a huge dollar negative because it's going to result in further rate cuts from the S&P. Moody's and Fitch will likely drop the U.S. from their AAA rating. And it's going to be kind of a mess. It's really a nightmarish scenario if the U.S. defaults on debt. It's a huge credit problem. We're going to lose a AAA rating, which has interest rate implications. It has people willing to buy treasuries will be decreased. It has major impact for the dollar, and it's a very dollar negative scenario. The longer that this impasse lasts, the more it suggests that the U.S. Congress is completely useless and won't be able to pass a debt ceiling agreement on time to prevent us from defaulting on our debts. The reason that the S&P Standard & Poor's cut the U.S. debt rating when they did sometime last year had nothing to do with the creditworthiness of the U.S. Their accompanying statement with the rate cut said basically that they were cutting the U.S. Debt rating because of the political process, because they had no faith in the ability of Congress basically to do exactly what they're doing right now, pass a budget, agree to raise the debt ceiling. All right, so they appear to have been spot on with that criticism, and that is why the dollar is suffering, because it creates fears that as we roll into November and the debt ceiling needs to be raised, we're not going to be able to do it. The U.S. government is not going to be able to do it because Democrats and Republicans can't get along because they're like 5-year-olds on the playground. So that is why the dollar is suffering and why I really don't think we're going to be able to see a sustained dollar rally while this is going on. It's going to be the same problem when we enter the debt ceiling debate. For as long as that debate rages and the more it appears to be at a gridlock, the more the dollar is going to suffer out of fear that we are going to start defaulting on our debts. Yes, default would be catastrophic is a... somehow in this case, catastrophic manages to be an understatement, which is just a terrific combination of things. Very rarely can catastrophic be considered an understatement, and yet this would indeed be a case where that may be. I would consider it very unlikely that we default. however foolish individual members of Congress may be, in general, the leadership of both parties has a solid enough understanding of economics, or rather they pay people with a solid enough understanding of economics to realize the real economic, political, and international impact of a U.S. default. And so I don't think it's likely to happen, but there is going to be some significant fear about it, especially the longer that this budget crisis rolls on. Fortunately, the will help the debt ceiling debate. Interesting. Why is that? I'm not disagreeing, Jason. I'm curious. Oh, yeah, that is actually something they're talking about right now, actually. That they're going to push it off for another week and then combine a budget resolution with a debt ceiling resolution, which would be the ideal scenario. And we may see some significant dollar strength if that actually plays out. I'm skeptical for right now. But we'll see. Allegedly, Obama is meeting with congressional leaders sometime tonight, Republican and Democratic leaders, so that may be the start of something. But, yeah, I mean, Jason's right, that if we funded the government and then had this whole thing happen again, it makes everyone really look like idiots. So it does make sense for them to tie it together, and hopefully that is what they'll do. Though we'll see exactly how all of that plays out. So sometime in the next week, we'll know probably, I hope, a little bit more about what the government budget's going to look like and whether or not they're going to tie that to the debt ceiling debate. I agree with you, Jason. Sometime in November, Caroline, I'm not 100% sure. It kind of depends. I think they've been doing creative accounting for a while now. Yeah, exactly. It kind of ranges. Depends on how exactly this budget plays out. The Treasury Department's been doing some funny book stuff to make it okay. I don't exactly know when that's going to wear out. Yeah, October 17th, I think, is the earliest where it could become an issue. I think that there are things they can do to push it off into November. But again, a lot of that's going to depend on what they're doing right now. Obviously, the people who do crap at the Treasury to make magic money come out of nowhere may be actually laid off right now. So I don't know if they're actually managing to do anything to push it back any further. Yeah, it's not a hard day. It depends on the spending of the government and spending and something else. Spending, interest rates. And government income. I mean, that's all a little bit varied right now. So yeah, there are magic fairies at the Treasury. I mean, when they call it when the government uses the phrase creative accounting, which sounds like something that the mob would do, that's when you start wondering that maybe we need to come up with a better system. All right, Caroline had requested Euro Swiss. Let's take a look at Euro Swiss. All right, so here's my Euro Swiss. It's been a very popular topic in the chat room lately. A couple of our members are getting heavily bullish dollar Swiss. There is some good reasons for that, technically speaking. Okay, we've held this level pretty well now. We filled the gap. To me, after this wedge breakdown, this last 5 days still looks corrective, and I think that there's a chance we could see one last spike down to this level. All right, call it 121.50. From there, I think if we do get down to 121.50, I get aggressively long Euro Swiss. Up for right now, I'm kind of just going to hang out on it. I will never short Euro Swiss. That's never something I'm going to do. I'm not going to buy it yet. Major resistance is 123.10 basically. 122.85 is the 200-day, and then 123.10 is the 50 and 100-day, and this trend line retest. So still hesitantly, I'm still hesitant to buy Euro Swiss. I'd like to see one more spike down. But if we break back up within this trend line area, then yeah, I'll start to get long. Dollar Swiss. All right, dollar Swiss. You can see this where this red line comes from. All right, the previous lows from January actually. I'm gonna drop down to a 4-hour chart. All right, if we do see a breakout of dollar Swiss here, we threatened one last night. It failed. Kind of got a 4-hour close, but not a convincing one. We broke back within it. Held 89.90 again. Alright, so a little miniature double bottom here within this channel. If we do manage to finally get a convincing close outside, I like dollar Swiss longs for longer term. As far as right now, we're trading right near the bottom of a very large range. Let's go to the weekly chart. Alright, you can see how significant this range actually has been. And we are trading at the bottom of it, so I'm not looking to get short dollar Swiss. But I'm not willing to buy it yet. Alright, there's a little bit more room down to the bottom of the range. It's about 89.50. Alright, so about another 50 pips. Could correspond with that Euro Swiss spike down. And if we do start to see the pair hit those levels, then I will start to get long. Or if we see a breakout of the channel on the 4-hour chart, I would start to get long there as well. CAD and NOK, sure. Yeah, the S&B is not done. They've only had to do one thing, so they're still there. They're not going away. So Euro Swiss longs are pretty safe above that peg. I don't think they're in any danger of giving up. Okay, dollar CAD has just been a nightmare lately. I've actually just stopped looking at it because it's just frustrating. This little rounded, curved area of consolidation here there's not a lot I can do with this. Alright, we have a trend line there, and we kind of have a trend line here. Kind of. Alright, so that looks like an ascending wedge after a deep bearish move. Alright, so that could be a continuation wedge. If we break down here below 103, we could start to see some acceleration lower. We could maybe lose. Let's go to the daily. You could lose this daily trend line, daily 200 EMA, and start to break down towards 101 or 100. But dollar CAD really just kind of hanging out right now. It's not a particularly attractive pair to trade. I really don't have a great interest in trying to find setups on it. I feel like there's a lot better out there, but like a gun to my head, I'd short it, but not happily. Alright, Norwegian krone, not my favorite. I prefer the Swedish krona. We'll talk about that in a minute. So Norway, what are you doing? Some decent large-scale consolidation here. If we go down to the 4-hour chart, alright, some more nice consolidation here on the 4-hour chart. Actually, it looks bullish, alright. This looks like a flag of some sort. Kind of the opposite, actually, of what the Swedish cousin looks like. If we do manage to break down below 59615, alright, then that opens up pretty solid move down. Alright. On the other hand, a break to the upside, then we'll have to deal with this 6075 descending trend line here from the daily chart. But above there, and again, a breakout. So watch this consolidation, basically on the 4-hour chart. Trade it as a breakout. Pressures to the upside, but I'd take it in either direction. Dollar Swedish krona, I talked about. It was a guest commentary on Daily FX not that long ago. Bear flag broke down, right? Then we kind of popped a bit higher. But after this breakdown, I'm still expecting to see new lows below 6.3 on USD SEK, which is one of my favorite pairs. Alright, so we had breakdown, retest, breakdown. Now we're sort of consolidating again. And like I said, I do expect to see new lows. Keeping in mind that, again, what we're dealing with is a significant trendline break. A very aggressive trendline break that we sort of flagged, consolidated out, and now we're broken down again. 6.25 basically targets. These previous lows are 6.27, so I'd look in that area. Got to find a re-entry for this pair. We spiked higher on the ADP release. Now it's going to reconsolidate, and we'll see. It's a choppy pair, but when it moves, as you can see from here. So that's one to keep an eye on. Alright, any other requests? I did pound, I did Aussie, I did Euro, I did Yens. Aussie Swiss, nothing really particularly nice going on here. Oh, Euro and Pound CAD. Alright, Euro CAD breaking up to the upside. Watch 14125. That is the previous high and the next major resistance level. Pound CAD. I'm pretty bullish Pound CAD, but I've been bullish Pound CAD since like here, and I just haven't bought it. I keep waiting for it to pull back, and then I keep missing these pullbacks. It's a very frustrating pair. I don't particularly like it. Caroline, I think, loves it, but you know, no one's perfect. It has been marching higher. I do think, like pound dollar, it's overstretched. Unlike pound dollar, this is the weekly chart. All right, we don't have a ton of resistance going on. This pair is, from a macro long-term perspective, really appears to be moonbound. This significant consolidation, all right, we've broken it. We've launched off the 200-week EMA. If we go to the monthly chart, all right, this is what we're looking at here. That's a bottom, all right, and that's a bottom that we've now broken. So really, pound CAD is one that you should look. I'm going to look for entries to get long and start to hold on to it. Pound CAD, Euro Swiss, those are some long-term trades where the fundamental picture lines up very nicely with the technical picture for a very long-term bullish aggressive move higher. Pound CAD, I mean, we could see the way that the pound data has come in, the way the Bank of England's going to have to start being a little bit more hawkish. I mean, watch 196.35 as the eventual target. That's, you know, 3,000 pips higher. It's going to take us a while to get there. We're going to need an entry. We're going to need a pullback, some consolidation, something. But pound CAD should be on your radar if you are a longer-term trader. Euro yen, Swiss yen. I did Euro yen, I think. No, maybe I didn't. Euro yen. Euro yen is ugly. Euro yen, I'm basically treating all the yen pairs kind of the same, but I prefer Aussie yen. Right now, looking for a breakout above here, or a breakdown below here. That's Euro yen. Either direction is fine by me. I'll take it in either direction. Swiss yen, actually might be my least favorite pair. I say that about a lot of pairs, but I think I mean it about Swiss yen. It does look like it is a bull flag right now, or like some sort of bullish channel to the downside, or sorry, bullish channel moving to the downside right now, eyeing a break above this descending trend line. 108.50 is the major resistance level. Of course, Swiss yen is the only yen pair that has a negative roll when you're long, which makes it, in my opinion, kind of pointless. I prefer trading Aussie yen, Kiwi yen, Euro yen, even pound yen. So I would call myself neutral to bullish on both Euro yen and Swiss yen, but there are bearish setups that I am watching, and I will trade Euro yen to the downside if it comes to that. I will probably not do anything at all with Swiss yen. Other requests. Ooh, that's a good question. It's probably euro dollar. That's probably my favorite. All right, again with this. So the reason I like euro dollar is because it has a great risk to reward and a pretty tight stop. Basically, if this setup's going to work, we're not going to get below 135.60. All right, and we're looking for about 137. So it's about 120 pips to the upside and about 60 pips to the downside. So 2-to-1 risk-reward ratio, relatively tight stop. And then again, I think, like I said, I think we could even see 138. So that would be a 220 pip second target. So I think it's a pretty great risk-reward trade. I think it makes sense fundamentally if the dollar stays weak. We got through euro event risk. People seem to like whatever it was that Draghi said. I would rather they just weren't overly upset by it. My second favorite setup is probably Aussie yen. Okay, if we can get back above this trend line, back above 92 basically, I really like Aussie yen to the upside. So those are probably my two favorite setups right now. Euro dollar would be active right now. You could buy that right here, and it would be a good trade. Aussie yen requires a little bit more time and patience. But if we do break 92, I think we could see new highs and up to about 96. See, reason why, longer term, if we look back, all right, that's a double bottom on Aussie yen. That's us breaking the double bottom. So now I think it's time for continued march to the upside. Aussie Kiwi. I forgot about Aussie Kiwi. All right, so Aussie Kiwi, pretty up there on my least favorite pair list. I did this for chart of the day. I think it was another Daily Effects commentary one, but it may not have been. We now have a triple bottom here at 112. All right, and the next key level is about 116.50. I like it long here, even after this sell-off. I do think that this pair is trying to base. I think that we could see another, I hope we don't, but we could see another quick sort of dip down to this 112 region before eventually I think we're getting towards to 116. And if we manage to break 116, all right, look for 121. So I think there's a ton of upside on this pair. Right now, your downside risk is pretty limited. 111.50, all right, would have to be your stop. It's a wide stop, but it depends on, if that's the kind of trading style you do. I'd like that. And then, of course, you have a 400 pip target up towards 116. So I prefer Aussie Kiwi for longs, but it's a tricky pair. Yeah, Jason Wheeler spoke today. I talked about that at the beginning. I think that it's slightly overblown. I might be in the minority there. It's not news that the RBNZ is thinking about hiking rates. Been talking about it forever. They're terrified of the housing bubble that's forming in New Zealand, and as well they should be. And so if they can't get housing prices to slow down, yeah, they're going to hike rates, and people have known that. That's why Aussie Kiwi's done this, all right? Let's look at the daily chart of Aussie Kiwi. All right, so in the last year, we've gone from 128 to 112. And that's basically wise. People know that the RBNZ is eyeing a rate hike if necessary. Wheeler confirmed it today. He might have upped the schedule a little bit, saying that they're going to do it sooner than expected, but I don't think it's news that they're going to be hiking rates, especially with the housing situation going on here. Yeah, Australia is too. That's going to be interesting because the RBNZ has been talking about it, and they say, look, we have a housing bubble, and we're going to hike rates to deal with it. Australia's like, look, we have a housing bubble, and we're just going to see what happens. So that's a very... Yeah, I keep seeing people throw that around. That's their best shot, all right? I mean, RBNZ is doing it too. They've instituted a couple new lending policies to try and reduce housing prices or reduce the demand for houses or residential properties. So we'll see how that plays out. The RBA is way more scared to hike rates. The RBNZ would do it tomorrow, I think, if they thought it was necessary. So that's why, from a rate differential perspective, Aussie Kiwi, that's why it's been bearish for so long. But, I mean, the recent RBA statement was pretty neutral. They've sort of shifted off their dovish stance. I don't think we're going to see any more rate cuts from the RBA. I could be wrong, but I'm going to say that we found the bottom for RBA interest rate levels, and we'll start to see them accelerate. Now, they won't accelerate as fast as New Zealand levels, but if they even start to accelerate a little bit from now, we should start to see the Aussie pick up a bid across the board. Yeah, well, yeah, we'll have to see. I mean, Australia has not gotten any help from their economic data, that's for sure. None whatsoever. It's been bad forever now. So if it continues to stay that way, I might be wrong, and they might have to try to cut rates again. But I think that they're really hoping to avoid that. True. And in the end, we'll not know because the RBA does what it does. Just does what it wants. It's kind of their deal. All right, any last requests for charts? All right, let's take a look. Last one, let's do the Nikkei. Nikkei sold off pretty hard last night. All right, it's holding this triangle. Look for 13, 13.6, but this 15,000 is the major level. All right, I can't overstate how important that 15,000 level is. If we break it, it's going really, really high, and the yen pairs are going to get dragged along with it. So I don't trade the Nikkei. I wouldn't even know how to go about doing that. But I would start to look for yen longs if the Nikkei dips to 13.635, and I'll start to really look for yen longs if we break 15,000. So that's the Nikkei and that's the yen, and that's how I feel about all that. Last questions or requests? Alright guys, thank you very much for joining me. This was a very enjoyable webinar. I usually actually run the ones on Sunday and not the ones on Wednesday, but either way, the ones that I run will be open. Look forward to maybe seeing you in another one soon. As always, if you have questions, you can find me in the chat room if you're a member, and on Twitter if you're not. That is my Twitter handle. Yes, not manufacturing Chinese PMI tonight. That'll be the big one, so keep your eye out for that. Enjoy what's rest of your afternoon if you're on the East Coast. Or if you're in the States, enjoy what's, your day if you're on the other side of the world. So, talk to you later. Thank you very much. Have a good one.